Now, the COVID-19 pandemic and its impact will dominate discussions at the International Monetary Fund and World Bank's virtual spring meetings next week. Now, the G20 finance ministers and the central bank governors will be key players at this meeting. And Reserve Bank Governor Lesetja Kganyago currently chairs the Finance and Monetary Committee, making the country's role pivotal, especially as it's the only sub-Saharan member of the G20. And while South Africa, of course, will advocate for its own interests, there will be many competing countries trying to do the same. And we're joined now via Skype by Danny Bradlow, who is a SARCHI Professor of International Development Law and African Economic Relations at the University of Pretoria. Thanks so much for speaking to us this morning, Danny.
Good morning. Thank you. And good morning to the listeners.
Danny, before we even start talking about the spring meetings, firstly, your opinion on the extension of the South African nationwide lockdown and also these additional 2 weeks. What are some of the key issues, do you believe, that needs to be highlighted further?
Well, I'm not a public health expert, so I can't comment on the need for the lockdown, but based on what the president was saying, that certainly sounds like a logical thing to do. It obviously will have very severe health, economic consequences. Many people will have a hard time during these 2 weeks, and the recovery after that obviously becomes a much harder as well, which I suppose makes these meetings even more important.
So this meeting, Danny, will take place under these very extraordinary circumstances of COVID-19 global crisis. First of all, they will be virtual for the first time. So just taking a look at that, and countries competing for resources, how do you see this playing out and what will be top of the agenda?
So the clear thing is the dramatic collapse in the global economy over the last 3 months. Just to give a sense of that, the IMF managing director yesterday said that in January, the IMF was projecting that 160 countries this year would have positive per capita growth. Now they're projecting 170 countries will have negative per capita growth. So the collapse is dramatic and worldwide. And as a result, the key focus of this meeting is what do the countries and what do the IMF and the World Bank do to help those countries that need help deal with the health problem first, as most urgently, and secondly, with the economic problems. The meetings are going to obviously be much more complicated because they're not face-to-face but virtual, which makes the discussions more stilted and more difficult. And that raises the challenge for us as Africa, because our needs are dramatic and great, but our voice is small relatively in these meetings.
And Danny, in your article that you've written, you say that it's projected that about 450,000 Africans could test positive for the coronavirus by early May. Where do you get these projections from, and what percentage of this would be made up of South Africans?
So those are projections, obviously. I read these in a number of different publications, so they're based on a lot of assumptions. I can't say exactly how accurate the numbers are, and it's possible if lockdowns like in South Africa work more effectively, that the numbers will go down, particularly in our country. But it's clear that the potential for the numbers to be very great across the continent are high, and the economic consequences will be dramatic no matter what, because of the lockdowns, because of the measures to prevent that means there's less economic activity. Because the global economy is collapsing, so commodity prices for African exports are collapsing, tourism is down. So all the things that Africa relies on to earn foreign exchange are going to be less available, and that makes the situation even worse.
Now, Danny, your belief is that Finance Minister Tito Mboweni should use these meetings to advocate for African interests first, as you pointed out just a while ago, to get resources to deal with the health crisis. Now, I'm sure you're aware of the Tripartite Alliance's position on this, and they do not believe that we should be approaching the Bretton Woods institutions.
Yes, I know that, and I understand their position, and I understand why the IMF is so controversial in Africa. But I think it's important to recognize two things. Firstly, the need for foreign exchange is going to be very great. There are various mechanisms that I discuss in the article, such as, for example, a release of special drawing rights, which is special money of the IMF that it releases to countries that can help, but that at the end of the day, we are going to need support from whatever source we can get it. And the IMF has emergency funding, which has relatively limited conditions attached to it because it's designed to deal with an emergency. And in this case, particularly the COVID-19 emergency. So that money seems to me to be relatively unrestricted money and important to access if necessary. But I think the big question that the Tripartite Alliance has to consider is, if we need to borrow money from somewhere, what are our options and who offers the best terms? We've borrowed from the BRICS Bank, the New Development Bank, and that's available on very favorable terms. But where else can we get the money that we need? If the IMF is offering money on better terms than anybody else, then it seems to me we should be taking that. If it's not better terms and we can get the money from another source, then we should be taking it from those other sources. But at the end of the day, it's a very pragmatic question, is we need money. How much we have to decide if it's more worthwhile to borrow the money or to suffer the consequences of just having a shortage of income, and where can we get that money on the best possible terms.
Now, Danny, I just want to run through some of the other points that you make. The second ask in your article there is that Africa needs access to foreign exchange, as you also just touched on there, to compensate for the losses caused by the collapsing global economy. What needs to happen in that regard? And of course, on your third ask, that many African countries need help dealing with foreign debt, it's been suggested that these institutions should give countries a debt waiver or a debt holiday, as it were, from this year. What's your view on that?
So I definitely think that's necessary for many countries, that debt holiday. The World Bank and the IMF, in fact, have been calling for bilateral creditors, official creditors, to give a debt holiday to the poorest countries. There is a facility in the IMF which China, Japan, and the UK so far have been supporting to help countries pay their debts to the IMF. But my big concern is that a lot of African countries, about a third of Africa's debt, to a total of about $140 billion, is owed to private creditors. And those creditors are much less generous historically, and there's the potential that speculators can buy that debt and exploit it. And so I think there needs to be some sort of mechanism to help those countries avoid the worst case scenario of that exploitation by what are called vulture funds. And to explain, the debt of many of these African countries trade on bond markets with the debt of other countries and other companies, but they're trading at a very steep discount. So in some cases as low as 35 cents on the dollar. Speculators have a history of buying up these debts at low prices and then demanding that countries live up to the original terms of the debt, which obviously earns them a very high profit. And I think we need a fund that can help African countries buy that debt, or the fund would buy that debt, agree to give a holiday to the countries during this crisis. And then once the crisis is over, we can explore what's the most sustainable and feasible way of dealing with that debt. And that will help the countries now and avoid the problem of the vulture funds.
And a final question to you, Danny. Given that the Tripartite Alliance has no interest in that funding from Bretton Woods institutions, what position does that place our finance minister and the Reserve Bank governor in?
It places them in a difficult position because it means that two of the most likely sources of funds are being taken off the table, and we have to look to whatever other sources of funds there are. Private creditors are very unlikely to lend money to us in the current environment. Official other donor agencies we're having to compete with all the other countries which are much poorer and have much less options than we have to borrow. And so it seems to me that what that means is we're tying our hands behind our back before we've even looked at what the terms of the debt could be. And that doesn't seem the most optimal solution at this difficult moment.
Well, Daniel Bradlow, thanks so much for your time this morning. Daniel is the SARCHI Professor of International Development Law and African Economic Relations at the University of Pretoria. And we're going to take a